Hi everybody, hello, it's me again for this part 1b of the lesson 5 of getting started in technical analysis. We saw already in the first part 1 of lesson 5, the one of the bigger or the major reversal indicators or pattern, and it is the head and shoulders. This one is one of the most important. I can do a quick summary, a recap, but please just have a look at the part 1a to have a better understanding of this reversal pattern. Now, in this lesson, we will go through the triple tops or triple bottoms reversal pattern. Those one are totally the same. They work exactly the same way of the head and shoulders. So it's just the pattern different, but the concept, the volumes and the concepts, let's say, are all totally the same of the head and shoulders. Let's get into it. Let's start the presentation, and first of all, just as a recap, a summary, what we saw last time was that all those major pattern, reversal pattern, they must have, actually they have, it's better if they have those 6 points. So before a reversal pattern there has to be a trend. It's normal, and if bigger is the trend or more important is the trend, more significant will be the reverse of trend, the change of trend, the change direction of trend. And then the point 3 was regarding the volatility of the market and the duration of the market. So higher and wider was the pattern, the more was the likelihood, the probability that the market will reverse. Then there is difference between top and bottom. So the top patterns are generally more volatile and shorter than the bottom. The bottom will be wider than the top, and with small price range. And again, while the volume are very important, mainly for the bottom trend. For the reversal, bottom reversal, because for the bottom, because it's easier for a price to drop down, to fall. It is much more complicated to make a price go up. So for a price to go up, we need a lot of pressure from buyers. So the volume has to be very high to start a new trend, while to make fall a trend that is an uptrend, it's much easier. Again, it works like gravity, image gravity. So a price that is above, it's much easier for the price to go down, because there is a gravity that is just pushing it down. So again, those are the main concepts. Those concepts that we saw already, those concepts for the head and shoulders, they apply all of them exactly the same way for the triple top and triple bottom. This is the head and shoulders. Just we had a look at it in the lesson number in the previous lesson, so lesson 5 part 1a. This is the main 10 points that I'm gonna describe to you guys. Please take those points, because those points, they are totally the same, totally the same for the triple top, almost, because there are some geometrical differences by concept, like target price, like volumes, are totally the same. So take a screenshot of this one, I will describe it. I'm not gonna read the slides. I will make it much easier for you, because I will describe directly the pattern. Again, this one was the triple top, this one was head and shoulders that we saw before. Head and shoulder we saw. This is the head and shoulders bottom. We saw it in the previous lesson. And now, again, volume consideration. This is all, and then this is where we stop the first part of the lesson. So starting from this one, what we can say that generally the head and shoulders does not appear always as simple as it looks, but generally are more complicated. Perhaps they can be with the peaks and troughs. They can be with top and bottoms. It can be even more complicated. This one is only on the right shoulder. This one is on left and right shoulder. This one is only on the left shoulder. So this one is the most common, because generally those patterns are symmetrical. So because they like the symmetry, generally this one is the most common. But it can happen even on the left or on the right shoulders. This is important because we can nail some more aggressive traders. They can start perhaps selling perhaps as soon as the point E is formed, so as the second, because we know we are sure that this one can work as reversal pattern. As soon as we got at this point the right shoulder is formed, we can just start selling from this point. Others perhaps they prefer to do a trend lines, and when the trend line is gonna be broken, they can start selling. Or this is some of the some analysts, some traders where they just this is just some of the ideas where some analysts, I mean, they try to find the right time to get into market to buy and to sell. So again, those one is listed there, please read carefully, have a look at it. And then this one we saw already before, this is the one most common, is left and right with those tops and bottoms. This one only on the left side. The same, totally the same concept applies to the complex head and shoulders bottom. It's exactly the same. Again, volumes has to work a same way of the top and bottom normal shoulders, and so on. Target price is gonna be the same, and etc, etc. It's exactly the same. So for more information, please just have a look at the previous lesson. And then keep move on forward the same. This is the one most common because it's gonna be symmetrical. It's much better, and this is on one side only. Again, those were the triple those variation from the head and shoulders. So they can be even differently from what I showed you, because we have to understand that those are just theoretical information, so there will be variations for sure. This is just an idea how it should look, the pattern, but for sure it can be different. So perhaps it can happen that I don't know, the E might be a little bit it's not almost same level, or perhaps neckline can be even a little bit inclination toward D can be even a little bit higher than B. There are some variation because this is not it's just theory. This is mainly based on probabilities and percentages. So it's just how it worked, how it happened before, and now it's happening again. And so based on the previous information, this is one of the third principle of technical analysis, because history repeats itself. So because it happened before and after those patterns, we saw, I mean, the people that were studying technical analysis, we saw that there was a change in the trend. So that's why now we are studying those patterns. So for sure they don't work always. So this is always important. They don't work always. This is a triple top. It's exactly the same concept of the head and shoulder. Head and shoulders. Yes, it works like that. The only difference is that the peak C, there's no anymore peak C, but all of them, they are almost the same level. Almost, because there are some cases perhaps it can be a little bit higher or a little bit lower than the previous one. But this is generally how it should look. As I told you already, there can be a lot of variations. As usual, can be throat and peaks as we saw before. So it can be even different throat and peaks on all of those three rally and retracements. So but the concept is the same. So once we got those three peaks and those two thoughts, we can define this line parallel almost to this one, and only when the retracement EF breaks the red line, this line. So, and we can ensure that as the price has been broken, or this trend line has been broken for at least from 1 to 3%, or if you want to be sure, let's say let's go for a 3% percentage penetration, we can say that the market might reverse. I'm always using the might because it's not sure. It's always not sure. Okay. This is how it should work. So it might reverse. The target price is just the distance between this red line and the peak C projected from the breakout point, as it was for the head and shoulder. Same concept. Volume, the same volume. They're gonna go lowers from they will lower down from the A, C, E from the peaks, and we are expecting high levels, high volume at the breakout point. Exactly the same for the triple bottom. Is exactly the same concept, everything the same, just a little bit more volume at the breakout, as explained already to you guys before. I said that to reverse a bottom, there has to be more pressure from buyers, so there has to be major volumes to reverse the trend. So again, it's much easier to reverse a top reversal pattern rather than bottom reversal pattern, for the reasons that I explained to you early or even in the previous lesson. So this is those are the triple bottom and triple top, and this is some example. So this one worked perfectly. This one, there was even the return move. The bottom line worked as support for this point, as resistance for this point. And as I told you, there are some variation. It's not always easy to find it. This is a daily chart. It's good. It's a daily chart. It's gonna a couple of weeks, even 1 month. It lasted, so it's okay. And then, this is as we were expecting this one, when it did not go down up to this level. As I told you, it can happen with variation for sure. The one that I showed you before, this is the classic one, but there will be for sure variation to that. Again, this is another example that it worked almost the same. Actually, there is even a gap. This is a gap that, please just watch my video on gaps, the importance of gap in technical analysis. Exhaustion, this is an exhaustion gap, so it's just at the end of the important trend. And then it worked again, this line worked a little bit, it didn't work properly as support, work support for this one, as resistance for this one, but this line worked as resistance. So something that we have to say is, you see this neckline, but this line parallel to the top ones has been broken once. But again, generally this is very important in technical analysis. A breakout, if you want to, it's better that it happens in a day or even 2 days. It's even better if two candlesticks has been for 2 days in a row below this line. So perhaps we know, perhaps the market could have started going down, or there is something wrong. It's not working as the triple top, but because this one is only an intraday, so it's not as important as 1 day or 2 days candlestick that they close. I mean, when the price close below this line, is much more important signal than just an intraday variation. So again, this is what happened here. This one was more critical. Perhaps this one could have been a misleading signal, because 1 day, a day, was broken. The line, the support was broken, and then the next day was even up. So this could have been really misleading. While this one almost misleading. This one no, because it's the same principle. So it's an intraday variation. It's only 1 day. Perhaps it's fine. That's why it's always interpretation is important, to interpret, to understand the importance of the patterns and the candlesticks as well. So again, I hope it has been clear. So if it is just an intraday variation, it's not as important as a candlestick or 2 candlesticks on a daily chart. So if 2 days candles are below this line, it's much more important than 1 day, and it's more important than just an intraday variation. Even if this one closed down, anyway, the closure of this day was below the support. The support line, but it's only 1 day and then jumped up again. So just to be confident, we can wait 1-2 days and see if for 2 days in a row the market has closed, or yes, below or above, depends if it's a bottom or top, this line. That's all for now. Thank you very much for watching this triple top and triple bottom. In the next lesson, we will be talking about the remaining reversal patterns. Thanks.